Good afternoon, everybody, and welcome to our webinar, which today is looking at productivity in the insurance sector. Now, we know that profitability is increasingly the #1 concern for modern insurance companies, and issues such as inflation, amplified cat losses, and supply chain disruption have all contributed to an extremely challenging environment where profits are shrinking faster than innovation can address those issues. In the face of this uphill battle, productivity has to be a priority if insurers want to remain competitive. So we're going to be talking about that in a lot more detail. We're very keen for you, the audience, to submit questions to our fantastic panel. And without further ado, I will start the introductions. I'm Sian Barton. I'm the moderator today. I'm a senior research analyst for Reuters Insights. I'm really happy to introduce Bruno Scaroni, who is the Group Chief Transformation Officer for Generali. I have Marco Marazza on the team. He's Chief Transformation Officer for Western Europe for Liberty Mutual Insurance. We also have Rachel Alt-Simmons, who's Head of Business Architecture and Design at AXA XL. And with us, we have Peter Manchester, who is EMEIA Leader at EY. And finally, we have Suzanne Acton, who is COO for Benelux Alliance. So welcome, everybody. Now, I know you have some presentations prepared on the issue of productivity for our viewers. So Peter, if you'd like to kick off, that would be fantastic. You're on mute.
Schoolboy error. So yeah, I'll give some thoughts in terms of my perspective on the background and why this is a hugely important topic and very prescient topic for insurers. I think it's because there's a sort of double whammy going on. The sort of sector is being impacted by whether it's disruptive technology, climate change, ESG, demographic shifts, all sort of impacting and really sort of reshaping the business environment for the insurers. And at the same time, a number of the fundamentals, particularly economic fundamentals, are challenging, whether that's, as you mentioned, sort of inflationary pressure, whether it's, wage and supply chain inflation we've seen over the last 12 months, whether it's more negative yields around the balance sheet. So those two things are colliding. And I guess if you look at the sector, you could argue that it's gone through many, many waves of cost reduction certainly over my career. I've done some of them. But actually, if you look at core operating ratios, they broadly remain the same as they were sort of 10, 15, 20 years ago in terms of overall percentages. So, and at the same time, a lot of investment has been put in by the industry particularly in terms of technology over the last 10 years to gain some of that efficiency. So I think there's a sort of challenge there in terms of, what do we need to do now then in terms of making a real difference to the expense base. And I think that, you can see some of the responses insurers are making. We've seen, obviously, some of the impacts of consolidation. So there's a drive towards consolidation, whether that's AXA and XL, whether it's, Intact's acquisition of RSA in the UK, whether we see PE coming into the market and really consolidating on the life side, books of business and areas of customer focus and starting to really drive that. And we're also seeing, I guess, other non-insurance players starting to come into the sector because they think they can do it more efficiently. And whether that's, Amazon's recent announcement around being selling home insurance on its platform, it'd be interesting to see where that goes going forward, or whether it's, we know there's a number of automotive insurers who are looking very hard at whether they set up their own, automotive manufacturers, looking very hard as to whether they set up their own insurance vehicles, because again, they believe they can create more synergy across their base from sort of manufacture through to repair, through to service, through to insurance. So I think there's some structural change going on. I think there's a real focus on, at the same time as reducing costs. I guess the thing that my clients talk to me most about is customer intimacy and how they create a much more seamless and elegant customer journey for their clients. As we all know, people don't particularly look at insurance as the exemplar of sort of seamless, elegant customer journeys. They look at Amazon, or they look at the big tech companies, or some of the big retail players. So there's a definite need and desire from the insurance sector to really sort of, create that customer engagement. But, that costs money. How do you actually do that in a way which increases efficiency? Productivity is not just a further on cost. And then finally, I think what we are seeing in response to some of these trends is some real critical decisions being made. Does the insurer have to own, if you like, all of its means of production? Does it have to own every aspect of its value chain? Or are you going to see much more sort of segmentation and focus on organizations becoming product manufacturers, organizations focusing wholly on distribution, organizations becoming much more fintech and insurtech-like? So I think there's a much more of a segmentation. But I do think underpinning everything from the clients I talk to is a real recognition that being at the, I think Satya Nadella talks about being at the frontier of efficiency. I think maybe in the past that was a nice to have, or, could be a competitive advantage. I think it's now just a ticket to the game. And I really do think that if you are not fundamentally efficient as an insurance company, I think, you will be at a detriment to your competitors. So I do think that imperative to drive through, efficiency at the same time as dealing with some of the trends that we've talked about is going to be, absolutely an imperative.
Thank you, Peter. That was really interesting. Bruno, can I come to you next? If you could take yourself off mute and then share your thoughts around productivity in the insurance space from the perspective of a chief transformation officer.
Sure, Sian. Thank you very much for your question, and also thanks for having me. It's a privilege to represent Generali. Now, just a couple of thoughts that sort of sparked in my head while I was preparing for this panel. Efficiency has been top of mind in the insurance business over the last, say, 10 years, given the low interest rate environment. And this is applicable both in the life side, where we're trying very hard to pursue a lower unit cost per contract, as well as in the P&C side with expense ratios and so on. So the real change that we all observed the last few years has been the, say, increasing adoption of digital and the rise of new technologies, as well as new customer behaviors, especially in the wake of the COVID-19 confinement sort of environment. So all these have changed the way we can pursue efficiency across the organization. And if I take the perspective of an international large group, one of the key difficulties that the insurance business have always had is to create efficiencies cross-border. Mainly when you are growing your size in a country or in a domestic market, you are very much capable of gaining efficiency benefits, but it's really hard to make these happen when it comes to cross-border operations. Really, when you go into another market, it is hard to say that, contrary to other industries, you take patents, you take technology, you take potentially, in our case, limited know-how, limited impact from brands. So it's very, very difficult to prove the fact that large groups have a greater valuation than their sum of the parts. Now, I guess this can change, and this is for the benefit of large international groups, especially thanks to digital and new technologies. And when I speak about digital, I mean everything that relates to customer and distributors engagement through digital. But I'm also implying the connection between digital, IoT, and 5G. If you take these three factors together, there's a complete radical change in the way we insure people, because we go from single data points to continuous data flows in terms of assessing risks. And this has an immense impact in the way we operate. And it can, of course, be very beneficial for customers as well as for companies and shareholders to increase their efficiency. On top of that, since we only usually look at our internal costs, and we never sort of frame the distribution costs because they are external to the insurance perimeter in most cases, this is also beneficial for distributors, especially when it comes to having a perfect alignment in data management with your distributors. And hence, every time you have the privilege of running, proprietary networks, especially with agency forces. That connection through data and digital, say, tools that would unite the relationship with customers and make it more compelling, then it becomes even more powerful if you have perfect alignment on data and how you can eventually increase the productivity at distributor level. Think of the benefits a CRM can provide to any distributor if you're capable of using meaningful lead management activities on proper data on customers. You know, by combining external databases, by looking at the next product or next need that a customer can have. So this is, in a nutshell, what from a strategic standpoint, we're trying to pursue at Generali, trying to make sure that our scale gains benefits in the adoption of digital and new technologies. And this is applicable throughout the stacks of our business model. In the front end part, when you basically interact with customers and distributors, in the operations, where you can apply, say, RPA, so robot process automation, you can apply optic character recognition, you can apply image analytics. These are all means that were not accessible to the larger market up until a few years ago. Now, if you, say, invent them in one place, you can make sure that you can deploy them elsewhere. And this is also applicable when it comes to core IT systems. In many cases, all our companies have legacy systems different country by country. If you can pick one solution that can serve, at least in least complex markets, more than one BU, more than one business unit, that is absolutely beneficial for making, you know, scale happen and benefits from that. All in all, I think that the efficiency gain or pursuit that the industry is trying to accomplish will never end. Also now we are in an inflationary environment. The industry needs to make sure that it gains ground in terms of technology and digital, because the risk is that if you take other customer experiences like the one that was mentioned by Peter before, and then with Amazon, you really face the risk of having the customer ownership, the customer relationship being taken away from carriers, and carriers just becoming either MGAs, so underwriting, say, agencies, or even worse, capital providers, which is what we really want to avoid, especially having a foothold that is so international and long-standing brands across many markets.
Thank you, Bruno. That was extremely interesting, especially thought your point around the continuous data points with how people are buying insurance and their online activity. That was super insightful. Rachel, could we come to you next and perhaps get more of a bit of a commercial lines perspective?
Yeah, absolutely. So yeah, I also want to thank Bruno and Peter, because I want to build on some of the comments that they mentioned, because they're very relevant to the work that we're doing in AXA XL. For those of you who aren't familiar with AXA XL, we are a global large commercial and specialty insurer. We are part of the AXA Group family. And I think to that point about consolidation, merger and acquisition, you know, the original organization has merged and been acquired several times over the past decade, from XL to Catlin to XL Catlin to being acquired by AXA Group. And then not only was it an acquisition, but there was a merger within that, because AXA had its own corporate commercial lines function. So we've been through this really tumultuous period, I think, as an organization for quite some time. And we finally, you know, some of that original transformation work that you guys mentioned, we actually did that about 3 years ago, at least from an organizational perspective. So we got all of that house in order. The really, really exciting part is that laid the foundation for investment in those big transformational opportunities. So as you can imagine, being an insurance company that grew out of lots of other insurance companies, right? You've got a lot of legacy stuff. You've got a lot of talent all over the globe, right? Coming from different parts of original organizations, different perspectives, different cultures, right? And trying to bring all of that together is you know, can be really, really challenging. So, you know, getting to that point where over the past year, we've gotten the ability to invest in 2 huge strategic programs. They're so exciting. So it's really great to be part finally after, you know, all of that acquisition activity to be in something that's truly visionary and transformational. So the 2 programs that we have a kind of a holistic digital transformation that we're doing, you know, to the points that I think Bruno was making, enable a lot of the digital work. So large commercial and specialty is a fairly bespoke business. So we're lower volume, but we're much higher complexity, right? So there's a lot of human touch and intervention that needs to happen as you consume a risk and understand what that client's needs are, provide the right products, the right services, the right coverage, support them when they have a loss, right? There's a lot of complexity there. And so the human piece is never going to go away. So what we're looking at in that transformational initiative is how do we create a better behind the scenes digital capability so that we enable our talent to provide a great customer and broker experience, because that's the number one thing that our clients and brokers want is actually not necessarily more tech, but they want more people. And the way that we get them more of our talent is to make our talents work much easier to do, right? Give them the tools that they need to have those great conversations with clients. So that's one area that we're looking at. And then the other piece that we've made a large investment in is a concept that has come from AXA Group, but is attached to Excel, which is our new digital commercial platform, which is looking at how we can create new risk services to help our clients better predict and mitigate risk before a loss actually happens. So I think that feeds nicely into that conversation about, we're always going to have NatCat, right? Catastrophes. We're always going to, those are going to increase. We're going to have inflationary pressures. There's going to be an increase of things that aren't even insurable anymore at some scales. And so how do you help clients prevent versus actually having to help recover? And how do you think about the spectrum of that?
Perfect. Thank you so much, Rachel. Now, could I, before I move to Suzanne, I'd just like to remind everyone you can submit questions to our panel. We are ready and waiting to answer them live. We have got one in, but we'd love to see a few more, so please don't be shy. Suzanne, it'd be great to get your perspective on this, because I know you've come from a bank assurance background, so you must have some fresh insights to share.
Yeah, I mean, I think firstly, thanks very much for inviting me to the table, and really interesting to hear my colleagues as well, or peers speak. So I'm going to build a bit on what Peter said and then go to some of Bruno and Rachel's thoughts. I think there's a real dilemma for the industry, and it's somewhere between evolution and revolution. So we've seen in the last 10 years that the insurance industry were far too slow to actually come up with the correct customer proposition and really digitalize. And the fintechs stepped ahead and they started to move very fast with some brilliant digital solutions. But the problem with insurance is it's complicated, it's highly regulated, and it's a complex business to run in a super efficient line the moment you go beyond a monoline. And so I think the complexities facing the majority of the insurance industries is that we have so much legacy in the business from an architectural perspective that it's really hard to have a revolution, right? Because ultimately we want to control the cost, we want to offer a better customer experience, but there is such an architecture and mainframe that it becomes beholden to the business and difficult to move. One of the points that Peter said is, I wonder how addicted the industry has been to the past way of doing things. It's a bit of how did we go from the horse and the cart to the car? Well, it wasn't putting an engine on the horse and the cart. So, and by this I mean that a lot of people are still building their own solutions. I think we are much further down the fintech environment that we should be buying and splitting and combining assets a lot faster. Equally, and what I find really interesting, having moved from the bank assurance platform where I was working with AXA, Rachel, and I was quite aware, I was around when you were purchased when I was with ING, but now with Allianz, and Allianz made a very strong commitment to do what Bruno has been discussing. And I think your point about are you the equivalent to the sum of parts is absolutely correct, because as a group you look fantastic on paper, but on an individual basis, do you have the right efficiencies for scale? And what I've seen in Allianz is they made a commitment some time ago to really get that scalability and the platforms to market and really drive the inside out and the outside in on the revolution. So it is part evolution, part revolution. Of course, that creates sometimes internal friction, but I think it's the only way to try and deal with the cost expenditure issue. I think if you, and I wonder if we're putting enough stress on, I see sometimes the patching up, and I'm not talking about Allianz because I think they're dealing with this quite strongly, but I see some of the patching up of architecture. If you look at the long tail business model, it doesn't equate to actually being revolutionary, and actually say it is quicker to do an end-to-end replacement of this system and take the hit than it is to drag it out, right? So I think sharper architectural mindsets on this that really have a much longer long tail and a wider perspective on the benefits it can bring to the customer, to the end agent broker is fundamental. And also equally important is that if we don't change that whole culture and architecture and strategy and approach, we don't retain the talent necessary to make the change. And one of the comments mentioned earlier, I think it was Bruno, was that you end up just being either a manufacturing house, a hold of capital. Well, we've seen that in the UK market. The aggregators fundamentally have pushed back the mainline insurers to a second seat position. And that's not where you want to be when you want to hold customer intimacy. You want to put end-to-end data. You want to actually start to become part of a wider ecosystem. But I think the threat to the whole industry is that maybe we don't move fast enough and maybe bite the bullet tough enough on some of the shift and the change we need to make from an architectural perspective. And equally, I believe that the ECG environment is such a compounding and fast-moving item that I wonder if we're thinking long tail sufficient on product development. I see, you know, I was very interested in Allianz, and they're one of the foremost players on taking a frontline position on this. But very soon is going to be a nowhere to go move. And is the market going to be ready for it? And are we going to have enough reflection in our data to our customers of the carbon emissions and how this impacts how they're purchasing and how we're working in the society? So quite a lot of pressure on the industry, but I think if we are bold and brave and take a much wider analysis from an architectural perspective, I think that we can make some strong players here and bring the fintech environment much closer to work together, because I think in isolation, neither of us will succeed to the full scale that we need to.
Thank you, Suzanne. Now I want to pick up on your point about legacy, but first I'd really like to hear from Marco. So Marco, could you please share your thoughts now?
Sure, Sean, and thank you very much for having me on today. Happy to be here on behalf of Liberty in Europe. So first off, thank you to all the other presenters as well. I think you guys covered a lot of great ground. First sharing a lot of the trends that we're seeing, but also speaking to some specific case studies. In case it's useful, I was thinking today of sharing a little bit more about what we've been seeing in Liberty in Europe and how we've come together to address some of these big issues that we're discussing, especially around driving productivity, and also leveraging the scale of some of the large groups that we work in. So for Liberty, I think we did something a little bit different than a lot of different carriers. We decided to centrally manage all of our operations across Europe. So in 2018, about 5 years ago, we brought together our operations in different countries, Spain, Portugal, Ireland, and with the aim of doing exactly what we're discussing here. So improving productivity to drive profitable growth. And so really what we did to improve our productivity was we created a single strategy to align our different country operations and develop a strategy where we created significant savings and then also use those savings to reinvest in the things that we've been discussing here around technology, but also pricing and growth, all things that are very important in the environment that we're all facing today. So in order to generate those savings, I think that we looked across all different areas of the company, and I think this is an exercise that's not easy to do. We had to rethink our claims processes. We had to challenge the need for extended service hours, eliminate high-cost product offerings. We're more of a personal lines player, so focus on more low and no-touch products. We reviewed our distribution model to become more virtual, consolidating vendors across country to really leverage our scale, just to name a few of the items. And like I said, this journey isn't easy, and I think we learned a lot of important lessons. I think for a big organization to go through this kind of change, you really need full alignment. You need alignment in a supportive culture so that people are willing to try new things. You need that same culture so people aren't afraid of the consequences if the results aren't as good as they expect. In addition, though, you also have to try new things, and when those things don't work, be able to react quickly. What we see too often is you keep going on a path for too long. Sometimes you have to know when to say, hey, we're going to fail fast, or improve your initial trials very rapidly so that those ideas can become a success. But in addition to kind of generating the savings, I think one thing we've been really keen to do is reinvest those savings to be able to generate further savings in the future, investing in things like technology and pricing. When we look at the landscape today, I think our strategy of creating a lean operation is critical so that we can pass on those savings to customers and also offset inflationary pressure, but also recognize that customers are incredibly price sensitive. Customers will go to carriers that seem to be more competitive. So really generating those savings on a global scale is incredibly important. And then further, and I think this point was also mentioned, investing in digital is really a secret to reducing costs, but at the same time driving customer experience, and allowing us to meet customer where they want to interact and also reduce call volumes, which obviously add costs. Finally, the pricing models, which I mentioned a little bit before, are critical to be able to respond quickly to new inflationary situations, although that's not the only secret. Obviously, the customer needs to be met in the middle by also with the insurance company, by also driving down costs on the insurance side. So that's some of the comments I wanted to share today. Thank you.
That's great, Marco. Thank you very much. Now, I'm very pleased to say we have had some audience questions come in, and one of them pertains very much to Suzanne's point around legacy. And this attendee is very interested to hear from the panel. What actions are you taking to address legacy system efficiency? Is anyone keen to jump in on that one?
I was mentioning something about this earlier in my introductory remarks, so maybe this is helpful. It's also public domain in the sense that it's part of our strategic plan, and it's on Genari.com if anyone wants to download the presentation. So when we speak about inefficiency in the operations and IT side, we look at three stacks: the front ends, the operations, and the core and legacy systems. In this specific area, as said, we come from, say, a jigsaw of companies that have been acquired in, say, decades or even centuries. And so many of these have different systems. And in big countries, there's also complexity to manage. In smaller ones, there are more opportunities. So what we've done is to pick, through a global RFP, one vendor at group level that could provide core system solutions for 5 different markets. They fall in the mid to low category at Generali, and looking for both P&C and life contract issuing, portfolio management, claims management, and customer database. So really the chassis of what an insurance business model can provide. And we are progressively using the same, say, code, although in different languages, in some cases also different currencies, to provide these companies with the same tool, with the ambition of having fewer costs on the upgrading side, so the commissioning, as well as on the licensing for accounts and users that are to be the ones that on a daily basis will run the system. On top of that, what we're trying to accomplish, and this is, even at the greater level of complexity, is how to manage data center consolidations. So getting data out of different markets and having data centers in one place, or maybe two for redundancy reasons, but trying very hard to make sure that we do not invest in servers, in mainframe systems in every single country, or we gain scale on that. And equally, if you translate this concept in the cloud space, whenever you want to open up an instance in the cloud space, you have to streamline your providers and vendors. It cannot be that every single country runs a cloud system on its own. It has to go through a common group platform and vendor, so that we also manage security levels properly. So these are the three levels and how we are trying to get the core systems going. Surely this is a pursuit that is common to everyone in the financial services industry, and there's a lot of productivity gains or inefficiency to be uncovered.
Thank you, Bruno. Does anyone else want to expand on Bruno's points, or are we happy to move on to the next question?
Sean, I'd love to add just a little bit of perspective too, as we talk about, legacy systems and thinking about kind of wholesale transformation. And I think coming from an organization that was historically what I would call bespoke and boutique, is that you have a lot of, had a lot of uniqueness in terms of what the process was, in terms of how you engage with the client, right? And how you think about the pricing and the underwriting of the risk, right? That's really the underwriter's expertise. And so you have a lot of manual processes that's our legacy, right? So it's a little more manual processes and Excel-driven processes that we need to look at how we rationalize. And so part of our transformation isn't so much the retirement of legacy systems or the upgrading of those, although there's certainly a big component of that. It's looking at where have we maybe not invested as much as we should have in certain technologies that we could use to streamline those processes, to standardize them where it makes sense, so that we can get rid of a lot of that legacy Excel-based stuff. And then the other challenge that you have with things that are floating around in Excel is you have an enormous amount of data leakage. Right, so your data ends up being locked up in some of those spreadsheets, and you can't really take advantage of it. One, for business processes to improve efficiency, but also data as a competitive advantage. Right, looking at data, how you can think about new product development, new service development, how you can do better things for your clients.
Thanks so much, Rachel. Peter.
Yeah, maybe I can just add a point, because I'm just listening to the conversation. I think it's a really critical point, actually. So going back to what Bruno said and linked to Suzanne and Rachel, it is about the extent to which you can bring scale to bear, particularly for the big global groups. So how do you actually manage to do that to reduce the sort of unit cost? And I think that organizations are doing it different ways. So as Suzanne said, Allianz have got a very clear template that they use in terms of their core systems, that they try and create that, utilize that similar core system across globally across the world. I think Bruno highlighted that, trying to get down to a more consistent set of technologies and make some limited choice, or make a limited number of choices about how you create scale. I think the other point then is there are organizations that just given their legacy footprint, they just can't make that work. And a good example I think is MetLife in the US, where they were trying to create a retail business, and despite being huge, they decided to use a greenfield site and create Bright House, which is a completely new business, because they felt actually the cost of trying to build it within their existing framework was too high, and therefore they needed to create that platform. So I think it is that balance of how do you use technology, as Bruno said, and particularly some of the advances in cloud technology and AI to actually enable some of that scale provision, or do you make other choices around either using third parties to provide some of those services, fintechs and insurtechs, or do you create more of a greenfield site? And I think that's a very interesting strategic discussion around the sort of future of the sector. Is how do you actually bring that to bear?
Thank you, Peter. I'm going to move on to another audience question now, and this is around this this delegate would like to ask, would you say it's digitalization, talent, new tech, or something else that's really going to be the thing that makes the difference to an insurer's productivity? Does anyone have a top priority there?
I can start on this one, Sean. So I think at the end, right, people are the ones who come up with the ideas. People are the ones who implement those ideas, and getting those people, and especially in the increasingly difficult talent war landscape, I think that is going to become very, very, very important. I think all companies, not just insurers, are going to need to be able to adapt to that. One thing that we've kind of pioneered is in the insurance space is looking at how to make a remote model work effectively across different countries. We've seen a lot of success, a lot of engagement that's built across our staff, and that engagement translates into better working environments where people are able to adapt more quickly to a lot of the most pertinent issues that we're seeing today. So respond quickly to inflation, drive new ideas for increased productivity, and also support those digitalization trends across countries.
Sorry about that.
Yeah.
Does anyone else want to step in there as well? Suzanne?
Yeah, I completely agree. And I think it's all three, right? But I think that you'll never get the tech output if you don't get the right environment and the right people on board. And this is what I meant about the millennials. I mean, I think one of the dangers the industry is fighting is not only from an architectural and legacy perspective, but also the legacy of knowledge within the business, right? It's a highly technical industry that sometimes, when it's a multi-line business, is in danger of being a technical warehouse rather than a retailer. And if you look at a lot of the millennials, a lot of the questions they're asking themselves of why do I go to work? What do I want to work on? It means that they need to bring a lot of themselves to the business to feel the value, right? So for me, it's a mixture of understanding the role of the business, within the growing society and a lot of the issues that we're facing. It's ensuring that we have an environment of empowerment to actually act upon it. So that's really turning the model from the bottleneck upside down and empowering those teams through Agile. But I'm not sure how fast fail we are, in all honesty, Marco. I think that, I'm really pleased. I've only been at Allianz a couple of weeks, but they are very driving the Agile business, and I really love the way that they have an inside out and an outside in approach, and they're strong with these ESG. So I think they're very value driven, and that allows you to purposefully have a discussion with the teams and attract talent from other industries that we desperately need. Because at the end of the day, it's the brains behind the tech, and it's the desire for the customer centricity that will digitalize and move this model a lot faster. And the more we have of the same input that we've had for the last 30 years, the less revolution you're going to see and the more micro evolution you're going to see. So I believe it's a complete end-to-end strategic approach. And if we don't attack it from all angles, this will be a slow and hard journey, and it will make it very difficult to fight inflation, because you will not be able to see the change fast enough in the productivity and the overall desire and connection with the customer.
Thank you, Suzanne. Did anyone else want to add to that, or shall we move on to the next question?
Yeah, I would just add one quick point to that, because at least in our space, right, we try to think about how we maximize talent versus trying to wholesale replace it with new skills, because we have some incredible expertise in our organization, but in line with those transformation needs, we need to give them the right learning tools and experience so that they can be successful in these new environments. And part of that does include figuring out how we attract new talent into the organization, I think, as everyone has talked about. But I also want to, make it clear that, the talent that we have is worth investing in, continually investing in to help, they're the ones that are going to be key to us being successful on this journey. And we just need to help them with the new methods and ways of working that are going to make all of us successful.
Thank you, Rachel. I've actually got another question around that. So obviously, the future of the industry, it demands that insurers are going to be equipped with skills that match capabilities. So we will need people who work in data science and actuarial modelling and other skill sets like that. To what extent do you think companies should be thinking about workforce restructuring strategies now so they can address the skills gap and also deliver efficiencies and perhaps deliver efficiencies in functions where activities may be outsourced, automated or eliminated? Peter, could you take that one, please?
Yeah, I mean, I think it goes back to what Suzanne was saying. I think this is a central point, right? So I think, as a number of people have said on the call, the pandemic accelerated a number of critical areas around, globalization of talent pools, need to access different skills and competencies. We've seen the impact of attrition over the last 12 months, the Great Resignation. Maybe that's lessening now, given a high inflationary period, but certainly has an impact. And I think it's more structural in insurance because, certainly from a UK perspective, if I just took that market, in the next sort of 3 to 4 years, about 30% of all of the underwriting technical staff, so underwriters and claims handlers, retire or at retirement age. Right? And there is not the same number of people coming into the sector. So the insurance sector is not pulling in the millennials that Suzanne was talking about, saying, come for a life. So how do you actually, how do you deal with that? And then if you ally on top of that, the fact that the markets that insurers have traditionally used to sort of meet that shortfall, so, India, Eastern Europe, they're going through structural change as well. It's not as easy now just to say, well, we can build a centre in Bangalore. Bangalore has more unicorns in the last sort of 2 years than the whole of the UK. So those staff are being pulled into a different environment as well. So I do think that is the key in terms of looking forward. How do you deal with that sort of workforce shift? I think part of the answer, it'd be good to get other people's perspectives on this, but part of the answer, I think, is around utilising third parties, partnerships, different skill sets to actually, create a more permeable organisation and not just have to house everything in every single insurance company, and leveraging that talent. I think it's also then about maybe, looking differently at how you source talent in itself. And we've got, I think, quite a historic way of actually recruiting in insurance. I think that, that could be broadened. And I think the role of HR in doing that and the sort of focus that I'm seeing, certainly in the sector of transforming HR as a function and with technology and also skill sets and capabilities, is going to be part of that. So I do think it's the critical question. I think as much as we've talked about the impact of technology and digitization and disruptive technology, that has undoubtedly a major transformative effect. I think it needs to be matched with a view in terms of what your workforce capability needs to be and how you best acquire that across the industry and outside the industry as well.
Thank you, Peter. Bruno, I'd be keen to hear your perspective on that question as well. Is that something you're able to talk on?
You mean on how we can eventually extract some value out of AI? Is that what you?
No, the question around how you can be restructuring the workforce to plan for the future and thinking about delivering efficiencies by using third-party partners, outsourcing, automating or eliminating certain
Oh, sorry, I was thinking of AI because it's connected to the answer. Now, I'm not one of the advocates for outsourcing on the IT technology side. I think that these are core parts of our value chain. This is applicable to our industry as well as others. IT is so important these days. It's not an optional, it's a must. So you have to have the skills and the proper competencies inside, not to get bound to an external vendor that would ultimately lead your business. this is even more applicable in those core parts like the ones I was mentioning and describing to you beforehand. So in the core assistant space, it is potentially less applicable when it comes to new areas, places in which you are trying very hard to build your own competencies, but other industries have been sort of leaping forward. And that is the case, for example, on the AI side. We all see the potential of AI more and more. If you think of image analytics and the way it can change the approach to claims management and instant reimbursement offering to customers, I mean, that is now becoming a standard in the industry more and more. When it comes to using ChatGPT, just to name one, to assess the way you interact with customers, well, I guess that you might want to rely on an external partner, at least when it comes to the infancy kind of like phases of your testing and deployment. All in all, I think that in the core pieces of our value chain, if you have the scale, you need to own these bits and make sure you can, leverage on them to build once and deploy consistently across the board.
Thanks, Bruno. And it would actually be good to talk a little bit more about AI, because one of our audience questions is what AI initiatives best relate to efficiency and productivity in your experience? So I don't know if anyone's able to give some examples of what and how they've been using AI in their own businesses. Deafening silence there.
I'd be happy to share one. So again, the large commercial and specialty space, we write a lot of very, very complex contracts, right? And they're very, 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 very long. There's multiple documents included in them. I mean, you could have a complex commercial contract that has, it's 50, 90 pages, right? It's enormous, right? And it's really difficult to screen through all of that contract language in a streamlined way. And so one of the things that we've been looking at or actually working towards is looking at how we deploy AI capabilities like natural language processing to look at how we can actually better review, categorize, catalog contract language, not only so that you can create really good, solid front, contracts that you issue, at time of policy issue. But when a loss happens, it becomes easier to actually review, is that a covered loss? Under what conditions is it covered, right? So there's so much contract language that would be, that's just ripe, right, for things like NLP. And like thinking about even ChatGPT, and, if that got trained on, you had a large model on contract language and like law verdicts, I mean, that would be amazing. I mean, think of how easy it would be for a claim handler or an underwriter to kind of go through all of that information and pull out the right types of clauses. So I think there's an amazing amount of possibility there.
That's great. Now, I want to move the conversation on a little bit now and just talk about the costs that insurers have and also the costs that their customers have. Now, obviously, there's inflation, there's increasing interest rates, and it's impacting carriers and clients. How do you think cost of living crisis is going to impact how organisations manage their cost bases? Marco, could I come to you on that one, please?
Yeah, sure. I think as people feel pressured from the external environment, right? They have less disposable income. You enter a recessionary context and they have less money to spend on goods, and insurance, I think, is no different. I think that as a result, competitiveness in the market is only increases, and the pressure to develop and deliver on efficiencies is more important than ever. So you can pass those savings along to customers in order to both maintain your profitability, but also to grow your business. So I think we've talked about a lot of the things that are critical in order to deliver those efficiencies today, but obviously the environment only makes those more important.
Thank you. And Peter, I'd like to come to you with the next question. It's around how do you think insurers can build flexibility into that cost base in order to scale up and scale down capacity? And how well do you think insurers utilize technology to ensure they get return on investment when they make that kind of investment?
So there's kind of multiple ways to answer the question, and I'll kind of refer back to kind of the large transformation initiative that we're working in, and again, some comments that Bruno made around how you think about global scale, and at what point you have localized processes, at what point you have regionalized processes, and what point you have kind of global processes. And that's kind of the space that we've been navigating right now to figure out, what are the things that you need to do to enable a local underwriter in a country, right? And there's also the regulatory, things that you have to consider there. And then what are the things that are common? What are the common processes, the common technologies that can support the issuance, the underwriting process, the policy issuance process, the claim process, that don't have to be unique, right? And that's been, kind of the work that we've been doing over the past year or so, is figuring out, okay, what's the core, and where can you scale and make those investments, and then what's the return on them, right? How much capacity are we giving back to a country or a region so that they can go out, increase their client time, right? Pick up new clients, those types of things that typically they don't have capacity to do today because they're doing a lot of localized kind of manual work. So it's looking at where we can scale. What are the right, what are the right processes that we can automate, augment, that make sense globally, and look at where we make those investments.
Peter, could you take that question as well, please?
Yeah, no, I was just listening to what Rachel was saying, and I wholly agree. I think we've covered a number of these things in the conversation. So I think, and insurance companies are at different places in the maturity of platforming and replatforming. But I think if you look forward, how are you going to leverage the best investment in technology? I think it's around being able to use distributed infrastructure such as cloud in an effective way. I think that's going to be critical. I think AI, we've talked a lot about AI, and particularly around sort of data ingestion and the ability to simplify a lot of the data ingestion that the insurers deal with. I think the third one is that I think the focus has to shift slightly away from almost like line of business platforms that we're all very familiar with, to much more around, some of the horizontals in terms of data, infrastructure, applications. So it's, how do you really digitize that core rather than just the individual line of business platforms? So I think those are going to be important. I think also we're seeing the increase in sort of low code, no code platforms that are being utilized to help stitch together a lot of the processes where, maybe the investment equation of replatforming just wasn't there. But actually some of the low code, no code platforms can give you that almost like sort of workflow capability. So I do think, there's a great opportunity for the sector to utilize some of those, as Bruno and Rachel and Suzanne and Mark have said, utilize some of that technology to really perhaps get an advantage that didn't exist maybe 10 years ago.
Thank you. Now we've had another audience question come in, and one of our audience is very keen on where the next phase of growth in insurance is going to come from. Is it going to be new markets, addressing retention, or through things like pricing and adjustments, or perhaps a combination? What are the thoughts on that one?
Maybe I kick off. Or Bruno, do you want to? Sorry.
Please go ahead. Please go ahead. I was filling the gap, so please go ahead.
I think there's some interesting data points, isn't it? So the protection gap in insurance is only increasing; it's not reducing. Right? So there are big opportunities for insurers to sort of focus on that. I think part of it is there are areas where it's just difficult at the minute. So like cyber, IP. Things where there's not a lot of sort of experiential data to manage your sort of your underwriting process, but the protection gap is actually broadening. So I do think there's big growth in there. There's big white space in the market that insurers can access. I think the second is around some of the big catastrophe risks. So now, I don't think insurers are going to be able to do that on their own. I think we saw through the pandemic, the coming together of government and insurers in terms of creating that backstop for some of these big events. And I think that's going to be really important in the future if, some of the cover and growth in the market around sort of more, pandemic style, black swan style risks is going to be maintained. So I think that's critical. And I think thirdly, ESG is going to revolutionize some of the policy coverage that are needed. And I think one of the issues at the moment for the sector is it sort of deals with a lot of the requirements for ESG around green infrastructure, etc., in a very sort of product focused way. And I think, you know, if you look at some of the requirements in the future around, you know, how solar power links to real estate, links to battery production, links to battery storage, I do think, you know, the sector is going to have to think more broadly, perhaps, around how it can cover those rather than from an individual product basis, but much more in a holistic way. But I think, you know, there's significant growth opportunities in doing that.
Is ESG something that everyone has got top of their agenda at the moment? And what specifically within ESG are your organisations looking at the moment?
So if I could just quickly, if I could just, you know, because Peter made kind of a comment I just want to build on a little bit. In the commercial space, one of the things, you know, just that we look at in addition to that, which is helping our clients through their own climate and energy transition, right? Because it completely changes the profile of their risk and how you insure them, right? And so you're trying to work with the clients to help them on that journey, and then two, you're trying to figure out, well, how does this change their profile? How do we think about our ability to respond to that in terms of insurance coverage? So it's a really interesting time.
Thank you, Rachel. Suzanne.
Yeah, I mean, you know, Allianz is really a thought leader on ESG, having signed up to a lot of the committees as being a leader that will ensure we're at zero carbon emission over a certain period of time. And that's a very hefty commitment. And I think, you know, for me, what's quite interesting is that I think we need to think of the insurance business model in a different way. I mean, we're looking at assisting our customers through adaptation, mitigation, but I think a very big part also what we're doing is looking at the fair and just, because from a society perspective, there's a lot of people that won't have the money to be able to make the necessary transition, and they're going to get left behind. So how do we manage that within our model? And taking we're a very data-driven industry, there's a point where that information becomes really key on how policies, governments, individuals can assist themselves. So you start to wonder, it's not just about insurance. If we're really proactive and forward thinking, our business model should also expand to becoming more advisory. And what about microinsurance claims that really help people? It's almost like a microloan, that you're allowed to be able to assist those customers to make that step change into, whether it be solar panels, whether it's onto the electric car. But ultimately, we all know we've got to get there as a world, right? So how do we enable that we're getting people to better understand protection is not an add-on, it's a necessity in a very unknown world. And yet we've got to help them bridge the gap between I'm here now and it's quite a dirty situation and I need to get to a very clean situation. And I think by thinking through more of our partnerships, understanding our value from a data perspective, we could come up with an expanded business model about what protection is. So I'm really a big believer in protection, which is for me a much wider solution than just insurance.
Thank you, Suzanne. Peter, we've got about 2 minutes left, so I don't know if you wanted to share with the audience just a couple of top line takeaways from the conversation.
Yeah, I mean, I think it's been a great conversation, and I think we've covered a broad range of a very broad range of subjects. I think that for me, I sort of reflecting, you know, if I went back sort of 10, 15 years, organizations would talk about being a cost leader, or a product leader, or a customer leader, and I don't think those choices exist anymore. I think cost is just, as I said before, a sort of ticket to the game. I think it's just an essential that you have to have a competitive and efficient cost base. I think then looking forward, I think a lot of the areas we've touched on is the pathway towards that. So I think, you know, the use of technology in the way that, you know, we've all sort of described some of the benefits of AI, cloud. I think they give real opportunities to not just compress costs, but actually to shift the cost curve through. for a lot of insurers. And I think the ability to be, I guess, in areas which is not a competitive advantage, more open to sharing skill sets, capabilities with other third parties and partnerships. Again, I think that advances the argument. And I think finally, the point around, at the end of the day, risk is changing. So we've talked a bit about ESG, we talked about climate in some cases. So the nature of risk is changing. And I think it's going to require different responses, which are going to require different product sets. So I think that whole sort of conception of how we utilize some of those levers to create that environment is going to be pretty important over the next couple of years.
Thank you so much. And thank you very much to all of the panelists. It's a super interesting discussion. There's a huge amount of value there. I'd just like to thank you all for watching. If you're interested in how technology can support better productivity, please take the Reuters Insight Technology Benchmarking Survey, which will be included in any follow-up communications to the webinar. And please don't forget, Future of Insurance Europe is going to be returning to Amsterdam at the end of November. So again, look out for more detail on that in your emails. Thank you so much for watching.